Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 high-yield dividend stocks under $20 per share. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that have dividend yields over 10%, come in with a strong buy consensus from Wall Street analysts, and also are priced under $20 per share. We're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found today's stocks using the TipRanks stock screener. Found under the screener menu, we put in a couple different filters, including a very high dividend yield and a strong buy consensus, plus a couple other factors like an outperform rating on the TipRanks Smart Score and a PE ratio under 25. That gave us our list of companies down below. Now, one thing to know is that today's stocks are all REITs or BDCs, and these can come with some different risks and considerations. They are known for their high dividend yields, but can be more sensitive to interest rate changes. And their dividends are taxed a bit differently, often as ordinary income, so just some things to consider before making any investment decision. You can try out the TipRanks stock screener for yourself over on the website or right on the TipRanks mobile app, which you can download using the links in the description down below. If you enjoyed today's video, make sure you hit that thumbs up button. Now let's dive right into these high-yield dividend stocks. First up is a company called Fidus Investment. They trade under the ticker FDUS, currently priced at $19.70. They are slightly in the red this past year, down 0.25%, falling about 6% in the last 3 months, but they have been climbing back a bit more recently. They do currently score a 10 out of 10 on the TipRanks Smart Score. Fidus is a BDC that offers customized debt and equity financing solutions to lower middle market companies in the United States. They focus on sectors such as manufacturing, business services, technology, healthcare, and more, investing $5 to $15 million per transaction in companies with annual revenue of $10 to $150 million. Their core services include debt and equity financing, which support the growth and development of their portfolio companies, fostering a mutually beneficial partnership. They've been paying out a quarterly dividend for nearly 15 years, and their current quarterly dividend comes in at 54 cents per share for a dividend yield of about 10.6%. They shared their most recent earnings report on May 8th. Earnings per share were in line with estimates, while their total investment income did exceed. Earnings per share came in at 54 cents, and that total investment income came in at $36.5 million, growing over 5%. They saw their net asset value grow to $677.9 million, and assets under management increased by 6%. Just a couple of weeks ago, an analyst at B. Riley Financial upgraded their rating on the stock to a buy. They said that their buy rating reflects differentiated origination strategies, favorable returns on equity, and stable to improving portfolio metrics. The stock does just have 4 current analyst ratings, but comes in as a strong buy with 3 buys and 1 hold. The average price target of $21.25 implies an upside potential of nearly 8%. Looking at those price targets down below, on the low end we do have our hold rating with an upside of 1.5%, and on the high end we have 2 ratings with an upside of over 11%. Second on the list today is Ellington Financial. They trade under the ticker EFC, currently priced at $12.95. They've gained over 8% in the past year and are slightly down in the last 3 months at about 2.5%. They currently score a 9 out of 10 on the TipRanks Smart Score. Ellington Financial is a real estate investment trust investing in a diverse range of financial assets. Their portfolio includes residential and commercial mortgage-backed securities, mortgage loans, and real estate-owned properties, aiming to generate income through interest and capital appreciation. They're focused on capitalizing on opportunities in the mortgage and credit markets, leveraging their expertise in credit analysis and risk management to provide attractive risk-adjusted returns to their shareholders. Ellington Financial transitioned to a REIT back in 2019 and pays out their dividend on a monthly basis. Their current monthly dividend comes in just shy of 13 cents per share for a dividend yield of over 12%. Their next ex-dividend date is at the end of this month on June 30th. They also shared their latest quarterly report near the start of May, and earnings were in line with expectations. Q1 earnings per share came in at 39 cents, while their net income came in at $31.6 million. They did see some challenges due to interest rate hedge losses and seasonal declines, but overall performance was positive with strong contributions from loan affiliates and securitization activities. Following that quarterly report, we did have an analyst from Maxim Group reiterate their buy rating. They said the company's strategic moves, including 5 securitization transactions, have reduced leverage and created high-yielding residuals, contributing to positive earnings. Their adept risk management and ability to capitalize on market conditions, as demonstrated by their performance in volatile periods, support the buy rating. Ellington Financial has 5 current analyst ratings and comes in as a strong buy with 4 buys and 1 hold. The average price target comes in at $14.20, implying an upside potential of over 9.5%. Looking at those price targets down below, on the low end we do have our hold rating with a downside of over 7%. Our high-end price target comes in at $16 for an upside of over 23%. If you've made it all the way to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Last but not least, we're taking a look at Trinity Capital. They trade under the ticker TRIN, currently priced above $14 per share. They are down a couple percent overall in the last year, and in the last 3 months have fallen 8%. They do currently score a 9 out of 10 on the TipRank Smart Score. Trinity is a BDC that provides debt and equipment financing to growth stage companies, particularly in industries like technologies, life sciences, and other high growth sectors. They source, vet, and invest in dynamic, privately funded growth-oriented companies across distinct business verticals, working to provide their investors with access to a strong and diversified portfolio. They offer customized financing solutions, including term loans and equipment leases, to support companies with strong growth potential, but potentially limited access to traditional capital markets. They've been consistently paying a dividend for 21 consecutive quarters, and since their IPO, they've distributed over $335 million to shareholders. Their current quarterly dividend comes in just shy of 51 cents per share, for a dividend yield of nearly 14%. Also sharing their first quarter report in that first week of May, Trinity did come out with some mixed results. Earnings per share of 52 cents was in line with expectations, though the company did see a decrease in their net asset value per share, driven by the early retirement of some convertible notes. On the positive side, they did see an increase to their net investment income, coming in at $32.4 million, and that was a 29% increase year over year. And their platform assets under management increased to more than $2.1 billion. And with 4 current analyst ratings, the stock comes in as a strong buy with 3 buys and 1 hold. The average price target of $16 implies an upside potential of over 10.5%. And looking at those price targets down below, they range from an upside of 3.7% to 14%. So that is a quick look at 3 strong buy stocks, all with dividend yields over 10% and priced below $20 per share. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. And please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own research and due diligence. Thank you so much for watching. Have a wonderful day, and I'll see you back here next time.